We're live, aren't we? Yeah, we are. We're live on the internet. We're live streaming. And I believe today is the very first day we are live streaming on Twitch. You have to let me know. It's a little odd, okay? I couldn't use our typical ticker time news, just straight how it is. I had to go ticker underscore time underscore news for our Twitch username. For some reason, ticker time news just straight out was taken. But whenever I would do a search for ticker time news, I couldn't find it. So that's what I had to go with. So it is up on Twitch. It should be streaming. I don't know right at this moment because I don't have an extra space on my monitor for that. I guess I could check it on my phone, but I don't even have Twitch installed on my phone. So I'll have to make sure that I can monitor Twitch. I can see the comments from the live stream software that I'm using. So if it comes through Twitch, I should be able to tell and maybe identify where the comments are coming from. I'm not quite sure about that. But anyway, stuff you don't need to know, I guess. How are you doing? I hope you're doing good. I hope today was good. It was a broad-based rally today, so I hope you did good. And it looked like the little warning signs that we've been seeing for the past three, now the fourth session, they played out. They played out. We talked about the past three sessions, how we were seeing these little bullish happenings in the market, even though there is a lot of FUD in the market. There's a lot of growth concerns in the market. This little rally, it's a bear market rally. It is a short-term event. It could last all through next week. And then we have a short trading week for the July 4th holiday. The market will be closed that Monday on July 4th. And, you know, we might get through July with green weeks from here on out. And then we get to September, and then it all starts to fall apart. I still believe, even with this rally, we have not seen the low for the year. That low is coming. Maybe October. That might be the perfect time for it to come and set back in. Although, and to give you a little precedent here, this is the daily chart here. But I'm going to switch to the weekly chart right quick. Still, for the S&P 500, before we get into this real quick, if you look, our biggest stretch of down weeks was right here, starting on April the 4th. So all of April, and then May, we got 3 weeks there in May. So 4, 5, 6, 7 weeks in a row of red pain in the market going down. We had one little rally that was in the middle, 23rd of May is when that started. And then we had 3 weeks of red, including the month of June. This is the first green week that we've had in the month of June. So I want to point that out there. We could get 6, 7, 8 weeks in a row of green. They may not be as big as they are this time, right? We got 6.2% on the week, or is it 6.4% on the week? That's a pretty big move. We may not see that week after week after week and then get back up to, you know, these levels, but we can definitely, we filled the first gap. We can definitely march up and then fill that second gap. That is a possibility. We can do that. So maybe that's what we'll see through the rest of the summer. Okay. Just so you know, running through the market at the beginning of the video, take your questions at the end. If you do have a question, leave the ticker symbol and your question in the comments. We'll go over it live during the show. Love doing that part. Okay, let's get into it here. I'm going to change it back to the daily, and then we'll look at it on the 15-minute chart too, because we did fill today's gap really, really nice, like almost perfectly to the T. Same thing for the SPY, same thing for the Nasdaq, same thing for the Qs, all filled in pretty nice. So welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me today. I am grateful and appreciated that you are here. The stock market, it was able, not unable, like we've been saying for so many days, it was able to hold on to its gains and break a 3-week losing streak for all the major indices. The market opened on a high note, and then quickly it moved sharply higher. We can see that. I'm going to go to the 15-minute chart. And for the first hour of the day, I got to fix this chart right quick. For the first 15 minutes of the day, you can see this gap up this morning. And the first hour of the day, we climbed real quick, and then we took a pause. And we paused right here at a high of 38.90. So we gapped up above 3,800, which, remember, the past 3 sessions, 3,800 had been a line in the sand, hard resistance. We got above that line today, 3,800. And then we get up here to 38.90, we stall. Sellers step in. And then we get to the last 30 minutes of the day. And boom, we put the foot down and we go. And we get to 3,900, and then boom, sellers step in. And then just for a brief period, sellers stepped in and buyers said, we are getting above 3,900 to close. And that's exactly what happened. Right here on the right-hand side of your screen, 39.11, that's where the S&P closed today. So that was a big resistance. We could open Monday with that resistance holding, and it could hold for a day before we move higher. Or Monday we could gap up above 3,900 and keep rolling, right? So after the big move higher, it was a narrow trading range for the rest of the session until that last little bit, right? The S&P 500 up 3.1%, and it finished the week above that 3,900 level. Very important. The Dow Jones, let's put that up here real quick. The Dow Jones, it was up more than 800 points. It closed up 2.7%. It did really well today. Again, a burst here in the beginning of the day, and then a slow sideways move, and then a burst here at the end. Real nice S-curve looking 15-minute chart there. So yeah, that looked really good. And then we got the Nasdaq Composite. It was the biggest performer today. The Nasdaq Composite was up 3.5%, the best one of the day. And again, same thing, 15-minute chart here. It gapped up over, and this is interesting on the Nasdaq. We'll look at this. It gapped up over the previous gap, right? On the 15-minute chart. Boom, look at this. We have this, I'll put the highlighter on here. We have this gap down right here, right? And then we rise up, resistance, we rise up, resistance, and then we gap up right above that gap. Now, all gaps must be filled. So at some point, we're going to have to, for the Nasdaq's going to have to come back down here and fill this gap. So maybe Monday we get some selling into strength, because another reason here is if you look at the Nasdaq is in a falling wedge pattern, right? There, we can see it right there. It is up against the ceiling of this falling wedge pattern. So Monday could be a selling event with the Nasdaq being up here. I mean, it did close above it on the 15-minute chart. You can see that. The last 30 minutes, it broke through. In the last 15 minutes, it held above that. So it is a potential that we see a breakout from this wedge, this falling wedge, and that would be a very bullish signal. Then again, if we can't break out, and this is just a little tease above it, again, it's nice that we closed above it, But if it's just a little tease above it, then we could come back down and fill in this gap down here. Obviously, that's not what I'd want to see. I'd like to see us continue moving. But remember, this is a short-term rally. It could last a month. It could last a couple months. But more than likely, this is going to be one that, let me clean this up a little bit here. This is likely that's going to be one, it may last through the summer, but this fall, it's going to be very choppy again. And seasonality shows that the summertime can be flat to slightly up. And this time of year with midterm elections coming up, and then in the fall, boom, it just falls right back down. And then after we get through the midterm elections, that's when things clear up and we start to rebound again into the close of the year, which is typically good, as long as we can keep recession off our backs, right? That would be the best course of action. Now, if we look at the we looked at the weekly candle for the S&P 500. Let's look at it for the Nasdaq here. The weekly candle for the Nasdaq was green. You can see it there, and it went up. It filled this gap on the weekly candle, because obviously you don't see that gap there, and then all the way to the next gap, right? But those gaps are really just on the 15-minute time frame. On the weekly time frame, it filled its weekly gap, which again would have been, you know, right. Let me show you right here. So that gap was filled on the weekly candle, but on the 15-minute time frame, where it has more of a weight per se, that gap is going to need to be filled in again. All right, let's keep hopping around here. We got some economic data today. Oh, real quick, the Russell 2000, it was also up over 3.1% today. Really good, strong performer. Small caps, nice job. Okay, economic data that was released today contributed to the positive sentiment that we saw in the market today. We got the new home sales report, and it beat May expectations. And that was a surprise to me. I wasn't expecting it. So I sent a note to our investors on Patreon, so they got that information when later on today, and I talked about that surprise in there that I saw. And then we also got the University of Michigan, their final read, and unfortunately for consumer sentiment, it just slipped again for June. It dipped to a fresh record low, and that's not good, right? Consumers right now are feeling the pinch and feeling the pain, and they have got to get some help. Oil today, it's I think it might be setting up a little bearish signal for us in the short term. We'll look at oil in just a moment, but it's still too high for the consumer. Gas prices are still too high. So yeah, consumers, they're just feeling mopey and sad and not real good right now. It also showed that the 5-year inflation expectations, they actually decreased to 3.1%, and that was 3.3% last month. So at least there's that improvement in consumers. They see inflation obviously getting a little bit better, but still not a lot better. Now, the buying interest today was broad-based, and the advance of the Vanguard Mega Cap Growth ETF, it closed up 3.7%. As the Invesco S&P 500 Equal Weight ETF, it was up 3.3%. So not a lot of difference there, but mega caps did take the lead. But again, that's just to point out that it was a very broad-based, all rising tides raise all boats type of day, right? In addition, the Russell 3000 Value Index, it closed up 2.7% compared to the Russell 3000 Growth Index, which was up 3.6%. So growth was doing good on those small caps. Now, all 11 S&P 500 sectors did good today, closed in the green. And if we pull those up, and let me just adjust this down so we can get all 11 on there, you can see all green all the way down that right-hand column. And this was pretty amazing. Oil, let's pull that up with energy. Excuse me. Excuse me for that. So energy here, it hit that bottom box down here and it's pulled itself up. These are weekly candles here. Let's go to the daily time frame on these candles. So yesterday it got into that bottom range because we said, okay, so where is the next area of support? And that's exactly where it is. And today it held above that. So it was up 1.5%. That's energy. Now let's look at oil because it plays a part in the energy sector. US OIL, enter WTI crude oil, and you can see here, this is what we wanted. We were watching for this drawdown, and we needed it to stay above this green highlighted area here, and it did today. It did not dip below that, so that was good. Let me pop in here on the 15-minute time frame, and you can see a big burst in the morning, and then it kind of settled down and then slowly elevated back up. On the short-term 15-minute time frame, it's really hugging between that 21-day moving average, and then if it dips down too low, it'll bounce off its 50-day moving average, and again on the short-term time frame. So it's really trying to hug that 21-day, which right now is still moving in the upwards direction over the past couple days. But if we go back to the daily view, and you can see here, it is well below those two averages, the 21-day and the 50-day. Excuse me for just a quick second. Trying to get that frog out of my throat here. Just a quick second. All right, hopefully that's a little bit better. Okay, hope I'm not getting sick or something. Bunch of dust. New setup here, moving stuff around. Got a lot of dust. That's what it is. Okay, moving on and forward. So the 11 S&P 500 sectors, they were all green, with gains ranging from 1.5%, which would have been energy here, to 4%, which was materials. Now, the transport stocks, they contributed to the outperformance in the industrial sector of 3.5%, with FedEx. FedEx has just been, it continued to climb today. FDX is the ticker for FedEx. They reported earnings earlier yesterday. They didn't beat, but they had good guidance. Up, I think 6.6% is where it ended the day. It was up 7.5% or 7.2, somewhere around there earlier. So it finished at 6.6% for FedEx there. And you can see that it's got a big candle up top there. Almost I'm sorry, it's got a big wick up top of the candle, almost the same size as the candle. So actually, let me go into the 15-minute chart here and let's see what were we getting here. So very little buying action up at the top of this candle. It was pretty split, a little more selling than buying. Looking at the volume profile here on the left-hand side of the 15-minute chart. But it did look like buyers did step in right around this 242, 243 area. That looked like an area buyers stepped in. And then buyers also stepped in down at 240. So somewhere in between that 240 and 243 buyers were stepping in. Let's see if they can hold that. That's a pretty big move. But again, if we go out here on the daily, you know, it's been hurt. Not as bad as the indices. As a matter of fact, what is it on the year here? It's down 5.5% on the year. So holding up really, really well. Okay. Another important thing to mention here about FedEx is it is above its 200-day moving average. And what I say about the 50-day moving average, bullish above, bearish below. And when you're above all three of these, the 21, the 50, and the 200-day moving average, you are definitely in an uptrend and you're in a bullish context. And that is good for FedEx. But it is getting a bit extended on the RSI. It is at a 62 or an 82. Let me see, 62. So it's just getting there to oversold conditions. Close there. Money flow index is also up there. It's at 70, so it's getting real close to being extended there. That's probably why the wick on top of the candle is there. It sold off a little bit because of that extension. So really good for FedEx. And again, that 200-day moving average is at $230.50. And you know, it hasn't been above this level here, excuse me, since February. All the way back here to February. So a nice several month bottom and top there for FedEx. So can it keep going? I don't know. I think it might be extended at this point right now. And one more thing to point out about this candle and candle wick for today on FedEx, because it was asked yesterday in the comments, I believe, or the day before. When you see a candle and a wick, right? If you see a hammer candle, which obviously it can look like an upside down hammer, or it could, you know, look like maybe a right side up hammer. Those are typically reversal patterns, right? Either we're reversing from the top, and then here we would end up going back down. Here, this is a reversal to the upside. So with the wick here, you know, taking up nearly half of the actual candle, that could be a sign of a reversal in a topping pattern for FedEx, at least in the short term. So keep that in mind. Now is not the time to go long on FedEx. Okay. Let's keep moving on. Oh, and one more. Moving on. I keep remembering the reason FedEx was up is because the company had above expectation, or the company beat expectations for guidance for fiscal year 23, and that overshadowed its bottom line miss. Okay. Also today, air carriers, they outperformed today and did really well. American Airlines is one that comes to mind. Ticker symbol is AAL. I believe they were up about 7% today. Let's see. What does the survey say? Come on. 7% and flat in the after hours. So it held on to its 7% into the close, which is good. Airlines, they really just seem to be messing up left and right all over the place. And American Airlines, it had the strength today to pull itself up, but again, it's still way down below its moving averages, and it's down 23% year to date. So 7%, yeah, that's great, but you know, being down over 20% on the year, that's not a good thing either. So that's not looking good. But let me look at the 15-minute chart here, and just to see for the look at that big move first thing in the morning. Very explosive. No gap up. That was interesting. And it seems like the past, it had been marching higher. Here, you can see right here, it was higher right here. Next day, higher. Next day, a little bit higher. But then it kind of plunked out and went lower before this big rally right there for the airlines. Now, I know sometimes with the airline stocks, they can be clumped in with whether you want to call them meme stocks or momentum stocks, kind of the same thing. Sometimes that happens with airline stocks, and that could have been in play today. Otherwise, I mean, it could have just been a normal day for transportation to move up, right? The Dow Jones transportation average, it was up 3.9% today. And, you know, with Dow theory, transportation always leads the way for the market. So if you have transportation head down, then that's usually a precursor that the market's heading down. If transportation is going up, then it's going to pull the market right along with it. Think of it as, the Dow Jones transportation is the rig and the market is the trailer. Wherever the rig goes, the trailer must follow. That's basically the best analogy I can think of for Dow theory. The truck, the rig, it is pulling the market either up or down, but it's leading the way. It's not a lagging indicator. So just keep that in the back of your mind. Interesting theory to look up, and you can see it play out sometimes. All right, back to energy, because energy, it continued this week's underperformance today. I mean, it did gain a solid 1.5%, narrowing this week's loss. On the weekly chart, and let me just pop that in here right quick, it's down 1.6% on the week. Weird thing about energy, though, as you go here and look closer on the weekly, is this is a pretty puck-size candle. The wick on the top is a little bit bigger than the wick on the bottom, but it's still got a pretty big wick, meaning there was a lot of volatility this week in energy. That's what it boils down to. Oh, and that hammer candle that I've talked about that shows reversals, actually there's a great example here on the weekly. This candle right here is making a bottoming sign showing that we're going to go back up. The head of the hammer is at the top. Underneath the candle itself is a much bigger wick. And then right up here, this is the hammer candle flipped over. So again, they're typically reversal signals. So here it's showing the market's going down. The head of the hammer is on the bottom. On the top of the candle has the bigger wick. So there's two perfect examples of that hammer candle and how it's usually a reversal candle. And if you got more wick on the bottom, you're going up. If you have more wick on the top, then you're going to go down. So just think of it as an opposite there for the candle wicks. Okay, I just saw that, wanted to point out because I know we've been talking about this week. I'm glad your calls went crazy today. It was a real good day. We saw this bull market or this day for the bulls coming, so we knew it was there. All right, the energy sector, it was boosted by crude oil. We looked at it already. It did climb 3.3%. Did we look at crude? Yeah, we looked at crude. US oil WTI crude. It was up 3.3% on the day here. Yeah, we looked at that. Treasuries, they finished a solid week on a lower note. With the 10-year, we'll go to that. US 10Y, the 10-year, it rose 6 basis points today. 6. Let's put this on the daily and not the weekly. And just fix the chart. Boom. Okay. There we are. So there it is. It's still under that resistance line that we drew. It's coming down a little bit. It could be making a little flagging pattern here. That's a possibility, like it did, back here on the bigger purple line right here, which signaled that it was going to reverse. And I still have my other two smaller green lines there that it might do this thing. But again, we'll have to be patient and wait and see. And remember, patience, that's your best asset right now in this choppy market, because you never know, right? We could have easily fell today, but we didn't. NVIDIA, they touch everything and people barely know about it. You are absolutely correct. I picked up some NVIDIA after you mentioned it yesterday. Pretty good start to the position today. Yeah, NVIDIA, it did wonderful. NVDA. We talked about these semiconductors here. Let's see. Adjust that chart. daily view here. I'm going to go into the 15-minute view right quick. And you can see, man, that NVIDIA, boom, first thing in the morning, and then just chopped around all day. In that last 15 minutes, it was up 1.25% in the last 15 minutes of trading. Excellent. It had a nice gap up, and real nice. Real nice. After hitting this bottom here, it had been reversing and going down. And look at this. See, it went down for the past 3 sessions, right? And it filled in this gap up that it made here in doing so. When we draw a line across, it fits right about perfectly. So real nice move and burst out on NVIDIA there. So that's great. That's real good. Yeah, okay. Not much else to add there. NVIDIA is a long-term winner. I'm still being patient on NVIDIA. Even though it's taken off there, I'm still waiting for it. I have not forgot you, NVIDIA, but I'm still waiting for that sub 150. Am I too low with my estimate, or are we coming back down and that's the new low that will make for the year in October time frame ish? Can't call it perfectly, but maybe October time frame we come back down after a summer rally, we make that new low, and that could be our bottoming. That's what my investment theory or thesis is saying to me right now, that we could get a nice summer rally. Been saying it over and over again, probably sound like a broken record, and then we'll fall in the fall. Almost could make a rhyme out of that, falling in the fall. Yeah. Okay. Yeah. So the 10-year, it was down. The 2-year rose. I'm sorry. The 10-year was up. The 2-year also rose 5 basis points to 3.06%. The economic data that we got today, I just want to talk about it. I mentioned new home sales earlier, and it was a surprise to me. New home sales increased 10.7% month over month in May to a seasonally adjusted annual rate of 696,000 units. Now, the consensus was 595,000 units. So just about 100,000 more units than expected. And in April, we had a 629,000. Year over year basis, new home sales were down 5.9%. So I think the main takeaway here for this report is that new home sales are counted when a contract is signed. The big gain in May, I believe, coincided with some sliding in mortgage rates during the month, because mortgage rates came down a bit in the month, which likely spurred a rush of buying interest in anticipation of mortgage rates moving up again and pressuring affordability. Tellingly, sales in the high-priced West region were robust, as were sales in the South, the largest region for new home sales. So, we also mentioned earlier this week about mortgage applications, and there were a lot of the adjustable rate mortgages. People are starting to get creative on their mortgages. Hopefully this doesn't lead to bigger problems, but the housing market is showing signs of foundation cracking. And it's only time before somebody's right on these home prices. Like I mentioned earlier, it might have been yesterday or the day before during the live stream, 2008 financial crisis, and today, the housing market, it's completely different. 2008, just to recap, we had a problem with bad loans and foreclosures. We had too much supply not enough demand. Today, we have too little supply and we've got a whole bunch of demand. And the rates going up, that's supposed to curb the demand and bring home prices down with it. But what if it doesn't? It's an interesting scenario to think about. All right, then we got the final University of Michigan index on consumer sentiment. And like I mentioned, it was the worst ever on record. It dropped to 50 points even. Consensus, for what it's worth, was 50.2 points. Not a big gap there. Now, remember, the preliminary reading was 50.2 points as well. The final reading for the prior month was 58.4. So we dropped 8.4 points. A year ago, can you imagine what it was 1 year ago? 1 year ago. It's at 50 points right now. What do you think it was a year ago? You think it was 60, 70, 80, 90? What do you think a year ago? This is consumer sentiment. How consumers feel about the economy. 85.5. So we've gone from 85.5 1 year ago to 50 points now, or last month. That's a big drop. And inflation, well, that's what it's all about. That's the reason we got the lowest reading ever. And this goes back to 1978, a long, long time ago. And if we think about it, there's a little comparison between the markets now and the markets in the 70s. You should look into that if you've got some time, you want to fiddle around. Look at the stock chart, the way it's acting in 2022, and look at how it's acting back in the 70s. Very interesting. Nearly identical. Now, the key takeaway from this report on consumer sentiment is that the understanding is that the consumer is weakening. The consumer is weakening, and it's broad-based across all incomes, all ages, all geographic regions, all political affiliations, and it's mainly due to inflation concerns. Now, Monday, we get economic data. It's limited. There's not a lot. At 8:30, we get the May durable goods orders. The consensus is 0.1%. A month ago, it was 0.4% is the actual number. So we're expecting it to go down by 0.3%. Durable goods, excluding transportation, the expectation is 0.4%. A month ago, it was 0.3%. So analysts are expecting it to go up by a 10% when you take transportation out, which makes sense because transportation is affected big time by oil prices, diesel. Now, that'll be followed up by the May pending home sales, and the estimate is negative 3.5%. Last month or the prior month, it was negative 3.9%. So really not much of a change from what the expectation is versus what it was the prior month. Not big at all. Not big at all. But it gets a little bit better, right? A month ago, 3.9%, and they're expecting 3.5%. So not much at all. All right. This was Friday, so I want to keep it super simple and super short. I do want to bring to your attention one thing here. One thing. I'm pulling it up right now because I'm going to share the link with you. I don't know if you guys have seen it or not, but this is a fascinating read, especially if you want to sit back with some iced tea on a nice warm Sunday evening on the back deck or front porch, whatever the case may be. I'm going to put the link in the comment section for live chat, and let's see here. And I'll leave it in the comment section too after the video's over. Ooh. Okay. It's from FactSet. Its bottom-up target price for S&P 500 drops below 5,000 for the first time since August of 2021. It's fascinating. There's a lot of projections and stuff in there. If that link doesn't work, just let me know. Bring it over here right quick. So this is what it is right here. It's not too big of a read. There are some graphics to go along with it. They break it down by sector too. It's very, very interesting. They have some individual companies in there too to look at. But it's fascinating, and it might give a little perspective on where we might be going, how the industry is doing, but more importantly, what the industry is predicting. It's not very long, so I mean, just take a few minutes. But this is a very interesting, and you can sign up for their newsletter if you haven't already. Obviously, they have a paid service, but they obviously produce free reports and articles too. Very interesting. A lot of data actually comes from the paid side of FactSet. So yeah, it's pretty cool. A lot of companies use FactSet when they're including data in their articles and so forth. So anyways, I found it interesting. Thought it'd be cool for you guys if you wanted to catch up and read about it. So yeah, it's been nearly a year, couple months shy, month shy, just month and a half shy for this. But yeah, there you go. All right. If you have questions, now is the perfect time to ask them, because I have gotten through everything that I wanted to do for Friday. While you get your questions ready, do me a favor, please. Click that like button and share this video with your friends. That really helps out a small channel like this. And of course, if you are a first-time watcher, click that subscribe button. And if you like this perspective and want a ton more, I mean a ton more, I share a lot with our investors on Patreon. Just click the first link in the description. Join us over there. I'd love to see you there. A ton of information. We even do trade setups for different types of categories. That went out twice this week on Thursday and Friday, yesterday and today. But it is just a ton of information. So if you like it, hop over there. Monday is a coin flip. I agree. Let me go back here. SPX. Now, I don't think, and let's let this load so we can see. I'm going to take volume off. Just one thing to point out real quick with volume. When we were making, on the daily chart, when we were making these little highs throughout the week, it was on lower volume. Today's push through the gap and filling in the gap was on higher than average volume. So that was definitely something to look for. On Monday, we want to see, again, if we're going to keep going up, and I think that we can, we want to see Monday more volume. We want it to come in on higher volume. That's always important. All right, I'm going to go to the 15-minute chart here. Let's take a look at this on the S&P. Now, we got our reversal here on the inverse head and shoulders right here, right? On the 15-minute chart, we got that. The neckline was basically this black line right here, which is the bottom of, and let me go to the daily chart real quick, and I'll take volume off. Oh man, I gotta take all my drawings off. I should have done this first. Actually, I think it's all right. Okay, good. So this black line here, which is the wedge pattern that the S&P 500 was in, when it broke down below that, filling in the gap today, well, today put it right back into it. Today it gapped up perfectly right back above the support side of that wedge. And now it's back in there. So what I would expect, because contraction, my apologies. Contraction always leads to expansion, expansion to contraction, and over again, right? So I could see us move like this on maybe, where's my highlighter? On Monday, maybe a little move like this. But once we get to the bottom of that gap, I think we'll find maybe a bit of resistance there. But maybe over next week, we can move up to filling, my highlighter died, to filling that gap and get up to the top again of this wedge pattern here. And again, if we move all week long across there, so 27 Monday, 28 Tuesday, 29 Wednesday, if we get to the top of that line, really Thursday, if we get to the top of the line by Thursday, we're at 4,000 points on the S&P 500, and 4,000 is going to be a big, big resistance spot that it's going to be tough to move beyond. 400 on the SPY. That's going to be a tough spot to move beyond. It'll trip us up. Also, something else that could end up tripping us up from where we are right now, and that's 3,900. I know we closed above 3,900 and we're at 3,911, but if I draw a line across here at that level, I mean, look at all the resistance that we could run into at 3,900. This little break above right here could just be the turtle kind of sticking his head through, and he's like, nope, and he goes back in. That's what could send us down on Monday. 3,900. We're a little above it. We closed, but that could send us down. We tapped it, but now we're going back down. It electrocuted us, right? It's like an electric fence. So we went up, we tapped it, we got shocked, and we're going to go back down. We're going to retreat. Where are we going to retreat to? We're going to retreat to basically the bottom of the gap up box that we filled in today, which is the bottom support area of the wedge, which for Monday would be about 38.10. So it's possible we could fall then to 38.10 on Monday because 3,900 is such a resistance. But we did close above it, so credit where credit's due there. Let me just go to the 15-minute again. And you can see when we touched that today, 3,900 right there at the close, it was big time resistance. We tapped it, boom, sell. And I know it's hard to see here, but there is on the volume profile right here, there is this big red candle. And the red candle is bigger than the peak right here on the volume profile over here on the left side here. That's a huge red candle that to me says that we just barely got lucky closing at 39.11. This is an area of resistance. And now we're going to have to pump the brakes, and we're probably going to pull back on Monday. That would be my guess. Trying to make it as logical as possible here using the chart. All right, let me just hop over to the SPY, and we'll see the same thing. Here we go. So at 390, which you could call that 3,900 for the S&P 500 or the SPX, 390, that's going to be a tough one to get above. And you could see here on this volume profile, all the way into the close, there's like no red whatsoever right here in this spot. I'll take the highlighter away, but look at that spot there. I mean, there's no red at all. The red really stepped in, which would be selling along this red line here, where the SPY kind of chopped along most of the day, not really moving, right? Once the gap up, once the move higher, it stopped. And that line right there is right about 387. So my point is, on the SPY, 390 is going to be a tough little area to break through. So we'll probably have a pullback on Monday. That wouldn't surprise me. Then again, I'll just say this one thing. The market is itching. The market's itching to get higher. But I don't think we're going to do it on Monday. Also, on the 15-minute chart here, look at the RSI. It was elevated for most of the day down here. It is at an 84 right now. That's not completely overextended. But in the short term, I'm talking a couple of weeks, the RSI has not been that high in a couple of weeks. And I know a couple of weeks includes the big drop down, the big fall. Okay, money flow, same thing. It is elevated right now. So Monday could totally see a pullback. On both there. Okay, looking at Nasdaq right quick for Monday. Let's see where we are. We're at the top again. I talked about this at the beginning of the live stream. We poked our head right above the resistance area of the wedge pattern that the Nasdaq is in. That could be resistance. And, you know, we just kind of closed above it just for some fun. But now we're going to have to come back down on Monday. And again, if you look at RSI, it is overextended. It hasn't been this high in a couple weeks. More than over a couple weeks, I should say. So again, Nasdaq, I could see Monday being a sell-off. Everyone taking profits that they made on Friday. The market could open down. Maybe it rallies. I don't know. Looking at the Qs, same thing here. We're at 295, and that's resistance, 295. It is right there at that resistance line perfectly. The one thing I'd say here about the Qs, it still had that head and shoulder, inverse head and shoulder pattern. It did gap up above where we needed to fill in the gap here. So again, everything right now, chart wise, technical wise, it's looking really, really stretched right now. As in Monday, I think could be a red day or a pullback, a cooling off day. But remember, contraction leads to expansion. We got our expansion. So maybe now what we're going to do is we're going to start contracting again, right? Let's go to the daily here real quick. Open this up. So you can see we chopped around right here. This was contraction. Contraction led to expansion, which sent us down here. We chopped around, made an inverse head and shoulders. We expanded up to here. Maybe now's the time for contraction and we're going to move sideways. That would be my thought. And then after contraction comes expansion. It is always in that cycle of things. So contraction, I guess that's what I'm saying I'm looking for Monday, is us to move sideways, maybe down a little bit. I don't know if it'll be a sharp pull down or if it's just, you know, a 0.5%, people just taking profits. But we are at certain areas that are resistant right now, and we have to be cautious of that and be mindful. Just throw in the VIX here real quick, and then we'll wrap up today's live stream. The VIX is still kind of elevated. It is at a 27.2. It's not in the 30s. It's not in extreme area here. However, if I draw a couple lines on here, you're going to see something that may not look to be all too great. Maybe I wouldn't go back there. Maybe I'll start here. Let's see it here. A shorter time frame. All right, so we got that one. Let's move you out. And then we can go from here, cover the tops like so. And we're still in this symmetrical triangle, right? So this to me does not say that volatility is going to end anytime soon. It doesn't look like volatility is just going to come straight down and everything's going to be rosy, because we haven't seen the bottom yet. Volatility is still high. So you must be mindful and cautious with your trades. And that should do it, right? Any other questions? Or are we good for this Friday evening? And we'll move on and join again on Monday after the market's closed. And of course, investors on Patreon, I'll be talking to you all throughout the day on Monday with all the usual notes throughout the day, so you can stay updated on what's happening in the market. All right. You are welcome. We are good. Awesome. Awesome. Then I will see you guys on Monday, and you have a wonderful weekend. Don't forget to click that like button, share this video, subscribe if it's your first time watching, and of course, if you want more perspective, click the first link in the description. We'd love to see you there. All right. Okay, everyone have a wonderful and safe weekend. We'll see you back. We got a full week next week, and then the following week is another short trading week because of 4th of July holiday. So good luck. Have fun this weekend, and I'll see you in the next video. Good night.